Welcome back, everybody. In today's video, I'm going to show you how I generated $28,000 on one of my personal trading accounts using the 4-hour and 15-minute day trading strategy that I have taught for free on this YouTube channel. Now, in a moment, we'll go over the TradingView charts so I can show you examples of some trades and how to utilize the strategy in real time. But first, we're taking a look at the TradeZella dashboard. So TradeZella is an online automated trading journal. It's what I use to journal my trading history. I've never been consistent with manual journaling. That's always been something I hated about trading. So the perfect solution for someone like me is to sign up for an online trading journal, because you literally just log into your trading account and it maps all of the data for you in really cool features such as this trade calendar. So taking a look at the calendar here, you'll see that there's about 2 weeks of data. The reason for that is because I started a new account to trade gold specifically. For those of you who watched my last video where I started talking about gold, this is not an asset that I regularly traded at all because I don't believe that it works very well with my swing trading strategy. However, I started to forward test and back test and realized that for my day trading style, the 4-hour and 15-minute style, it actually works quite well and it's a pretty abundant asset. So I'm looking forward to continuing to trade it, but this is all the data that I have so far, but I will continue to do this in June. So hopefully if this video is well received, I'll continue to do videos like this and keep posting updates on how this is going. Now, before we move on to TradingView, let's just quickly look at the statistics here. So as you can see, the net P&L is just under 28,000. The trade win rate is 83.33%. That seems pretty significant, and it is, but the thing is there's only 2 weeks of data to go by. So you can't say that that's the win rate of the overall strategy. That would be absurd. I'm not one of those marketing gurus on the internet. I'm not going to clickbait this video and say this strategy has an 83% win rate. That's not how this works. If I traded this for a year consistently, for example, and it was around that percentage, then that would be a valid average win rate to go by. But I can almost guarantee it won't be that high after a year from now. It'll probably be around 60% or so, but that's just a guess. So far, so good. But as I said, 2 weeks is not enough data to form a real average win rate. Now, as you can see, I had 2 red days. I had a bunch of green days, which were fantastic. And I believe the gray days means I was holding a trade, which I definitely held a bunch of these trades for more than one day. So I'm going to assume that that's what that is, if I'm not mistaken. But yeah, the calendar feature is so cool because it's such a visual representation of your trade performance, and I love that. And then also, of course, you can see the actual positions and the dollar value. If you click this button up here, you can change it to R multiple or percentage if you want to hide the dollar value. So there's a ton of cool features. I'm not even using half of them. I'm still somewhat new to the platform, so I have a lot of investigating to do. But it's a great platform. If you want to sign up with them, I included the link in the description of this video, so go check it out. Now, with that being said, let's move on to TradingView and actually break down how the chart work of this strategy plays out and how I was able to achieve these results. So here we are on TradingView, and we're currently looking at the 4-hour time frame, which is the starting point, the foundation for this day trading strategy. So it's very straightforward. I've done very detailed content in the past on this strategy, so I'm going to keep it short and sweet today. Now, on the 4-hour time frame, our job is to identify the bias of this market. What's the bias here? Well, if we just look in this general area, we don't have to go too far to the left. We don't care about what happened all the way back here. It doesn't matter. Just look at what's currently in front of you and start to formulate a story of what's happening. So first things first, we can clearly identify that there was a very definitive uptrend here. It doesn't take a genius to realize that price is trading upwards, creating higher highs and higher lows consistently. The first bit of profit that I started to generate on gold was actually at the very top of this trend. And I know it's not wise to try and pick tops and bottoms, but that wasn't my intention when I started trading this asset. I wasn't trying to pick the top here, but what I did realize is that this uptrend took out these major highs right here, okay? Let me just draw an arrow to them so we're all looking at the same thing. Price clearly took out those major highs, and as you all should know by now, there's plenty of liquidity resting above major highs and major lows in the market. So as soon as price took out those highs, I was thinking to myself, okay, are we going to continue pushing to the upside? Or was that a liquidity grab, and are we going to start to see a reversal now? So that doesn't mean you can just start selling right away if you think there's going to be a reversal. Keep in mind the 4-hour time frame in this strategy is only used to determine a higher time frame bias. And then you go down to a lower time frame, the 15-minute, for example, to investigate further and spot potential entry opportunities. So knowing that price was so overextended to the upside, and we're likely to see either a reversal or at least a retracement to the downside, that prompted me to look at the 15-minute time frame. Now, scrolling back to where I just was, if we zoom in a little bit here, we'll start to see the bearish price action that started forming after these 2 highs were taken out. So if it was just a retracement for a continuation higher, I would have anticipated price to kind of stop out around here. Like if we retraced back down to this area here and then started pushing to the upside once more, that would have made sense for bullish continuation. But what do we see instead of that? We see clearly price broke through this structure and then continued even further and broke through this structure as well. That's a very bearish sign. So that prompted me to start selling around here, around here. Every time there was a pullback into premium prices, I was selling. Caught another sell here. I'm not going to go over each individual position because I actually did that quite a bit in my last video when I was talking about gold as well. I covered basically this entire area and showed execution proof as well for any of the haters out there. Let's go back to the 4-hour time frame. So taking a look at the 4-hour time frame, as I just mentioned, I capitalized on this bearish move right here. At a certain point, I stopped selling because there wasn't any entry opportunities. It just kept melting and melting and melting. So I needed to wait for some sort of relief in order to get involved with something else. So using the same theory that was used up here, what can we see here? Well, we see that price took out this low, which there's obviously resting sell side liquidity underneath that low. Whenever that happens, whenever a high or a low is taken out, you have to ask yourself, is this going to be a break of structure for continuation, or is it a liquidity grab for potential reversal? So as soon as there was that violation of the previous low, then it's time to investigate. Let's use the replay tool. So when I drop down to the lower time frame, it's not going to get too hectic. So looking at price action on the 15-minute time frame after price took out that low right there, what can we see? Well, we see clear bullish price action. So there's plenty of opportunity within here to catch these 15-minute long positions. So I hope you're starting to see that by using the 4-hour time frame for your overall higher time frame bias and then the 15-minute time frame for your executions, there is an abundance of opportunity available. As long as you understand that higher time frame direction, you can really take advantage of both pro trend and counter trend opportunities on the lower time frame. Obviously, buying on the 15-minute time frame is counter trend here to the higher time frame bias because the bias is clearly to the downside on the 4-hour time frame. So 15-minute long opportunities would be counter trend. But that's okay because we know that price respects premium and discount levels. So we know that until price gets into these higher areas of premium price, it's safe to be buyers in these lower legs. Let's go back to the 15-minute time frame and analyze this a little bit more. So as you can see, price was creating like a bullish trend for quite some time on the 15-minute time frame. There was plenty of opportunities here. I'm not going to go over each individual one because you should all know this strategy by now. It's literally a break of structure and a Fibonacci retracement down to your ideal entry point, whether it's a 75% like me or the 71 or the 70 or the 67, the 62, whatever you want. Test it on your own. Figure out what you're comfortable with. For me, it's the 75, and there's just plenty of opportunity here. You can see all the deep retracements. Now, it doesn't do these deep retracements on the 4-hour time frame, but on the 15-minute time frame, there's plenty of opportunity, typically within New York and London session. Now, one thing I'd like to touch on here before moving on is one of the reasons I was able to compound my profits so significantly without actually having too many trade ideas is actually stacking my trades. So what I mean by that is I would take one trade to begin with. When it would break structures to the upside, I would move my stop loss to break even and then enter a new position upon the retracement of that. And then it would break structure again. I would move that stop loss to break even. And then upon the retracement, I would enter again. And I kept stacking positions, usually 2 or 3 at a time. And then when it would finally hit my intended take profit, the profit was pretty substantial. So I don't do that too often, but I'm thinking of incorporating it a bit more into my trading plan with swing trading too. I think it would be valid for both of my trading styles because it's really a way to compound profits and also aggressively manage your risk at the same time. So you're being diligent, you're being professional, and you're capitalizing on each market move. That's what really allowed me to scale these profits to almost $30,000 with just a couple trade ideas. You know, the original trade idea was at the top of the range here. And then if I just take off replay mode, I was a buyer within this range here. And then I noticed price was reacting to this order block and I didn't think price was going to get too much higher. So I started selling. And even from a higher time frame 4-hour perspective, we can see the retracements coming into the 75% on the 4-hour time frame and then pushing to the downside, coming up again, deep retracement, pushing to the downside. There was plenty of opportunity here, especially on the lower time frames. You guys should see some of the trades my members are capitalizing on too, like within the Currency Pros community. A lot of traders are hopping on gold as well. Some have been trading gold for quite some time. Now let's go back to the 4-hour time frame and focus on the overall narrative here. Let me delete the drawing tools. Now let's talk about what's probably going to happen next. Well, today was NFP Friday. Now, during London session, we saw a huge push to the downside. And upon New York Open, when there was NFP at 8:30 Eastern Standard Time, we saw another big push to the downside, continuing this bearish trend. I mentioned this in my previous video. On the 4-hour time frame, you don't really see deep retracements. So although I was monitoring this entire range here, you can see that price did not reach my intended area of premium price. Instead, we reacted somewhere around here, maybe around like 50 to 60% of the range. So not too far up. And then as you can see, price absolutely melted, and it has now broken structure to the downside once again, right here. So now thinking back to everything I just said in these examples back here, what can we anticipate next? Well, it seems as though price is actually breaking through structure. It doesn't look like a liquidity grab, but price just doesn't move in one direction forever. So it could go a little bit more, who knows? But eventually there's going to have to be a retracement. As I just said, on the higher time frames with gold, there's typically not a 70 to 80% retracement like I'm used to trading with Forex pairs. So what typically happens with gold is anywhere from a 30 to 50% retracement, as far as I can tell. Using this little drawing tool as an example, we can anticipate on a lower time frame, the 15-minute time frame, to look for buying opportunities within the retracement. Keep in mind, on the 15-minute time frame, this would look like a bullish trend, but using the higher time frame bias, we're only looking for a retracement of the bearish range. So it would be counter trend buys until we reach premium prices on the 4-hour, and then we could be sellers, right? Pretty straightforward. Just simply using the 4-hour time frame as the overarching bias to formulate where price is going to go. And then you drop down to the 15-minute time frame and you can find intraday opportunities based on counter trend or pro trend. This might take a bit of experience to get used to. So what I would recommend is backtesting. There's plenty of backtesting tools available. If you want an example of one, head over to the link in the description of this video and you'll find the backtesting software that I use. I would strongly recommend getting very comfortable with this strategy and this way of trading on a backtesting simulator or software. Or what you could do is forward test on a small personal account or a demo account, or even a prop firm trial account if you'd like. Using those methods of testing, you can gather data, you can gain confidence with the strategy, and you can work towards using it on a live account or a prop firm account. So I hope the things that I talked about in this video provided you with tremendous value. That is, of course, my goal here on YouTube. If you enjoyed this video, please like, comment down below, hopefully something positive, and subscribe to my channel if you haven't already, because I plan on doing many more of these styles of videos. If you liked it, let me know so I know what to continue. Thank you all for watching, and I'll talk to you all soon.